Okay, let's move on to the next screen there. Adapting to a changing economy. For individual trucking companies, and especially for small motor carriers, adapting to a changing economy will determine your future. I can think of a coaching client with a 3-truck operation who has worked at adapting to a changing economy. This 3-truck operation hauls produce from the western U.S. to the Midwest. He has a solid base of shippers in the West, but like most, has a difficult time finding return freight. What this carrier has done, he utilizes the spot market freight in both truckload and LTL to get his trucks back to where his customers have more outbound freight. He combines the return freight revenue and his outbound revenue and analyzes it carefully to be sure he is exceeding the break-even point for the round trip on each piece of equipment. This may require multi-leg returns, multi-LTL, or partial loads to accomplish each round trip. He is also working very closely with his outbound shippers to establish specific freight lanes to coordinate with the spot freight market return freight. The best measure of his success is that last November he started adding 5 more trucks to his fleet, 1 truck at a time. Now let me give you some takeaway strategies from what this gentleman is doing. 1, he is utilizing that spot freight market for return loads. 2, he is looking at both LTL and truckload for backhaul. In other words, he's not always loading that truck to full, but he's getting something on that truck that's giving him revenue to get to the next location. All right, he's developing multiple legs to return trucks home. In other words, he's not trying to get them directly home. He may take and do 3 or 4 different loads and pickups to get that truck back home, but doing it in lanes that are creating revenue. And he does it, again, through this spot freight market, through the load board. And then he's working closely with his shippers to establish profitable freight lanes. So where do we go from here? Well, we've got to go back to basics of operating business. So that's our best course. And what do we have to do? Well, we have to know our break-even points, capitalization needs, and our market. Understand how much revenue your company produces against your costs, your accounts receivable, and the quality and diversity of your customers. Manage all of your assets, cash, equipment, property, accounts receivable, customers, employees, and contractors with a plan. Be prepared for the lean times, equipment breakdowns, and replacement, and covering the daily cost of operations while waiting for customers to pay. This strategy must not let growth outpace capacity. And I want to repeat that because that's what a lot of us do when things start getting really good. We allow our growth to outpace our capacity. We need to make sure that we don't do that. That will kill us just as quickly as no freight or low rates will do it. And above all, there needs to be a vision of building the company's net worth. Since some of these topics are more complex than we can cover in this webinar, we will provide a list of resources for more information on these questions at the conclusion of the presentation. Now let's talk a little bit more about this break-even point. All right. First of all, it's the point where losing money stops and profit begins. And what I mean by that, if you look at the current graph that we've got up there, and I hope the colors work good here, is we have got, if you'll look, the part that says load revenue. And if you look at the very bottom left corner of the graph, you'll see that that's all the way down in the deep corner. And then we've got the blue line, which is our total cost, which is a combination of our load-specific cost, operations cost, and fixed costs. All right? Now, if you'll see that the break-even point is where the blue line, which is our total cost, crosses the load revenue line. In other words, the load revenue line starts to exceed our total cost. That is the point where profit actually begins. That's actually a point where capitalization begins because profit goes beyond, a little bit beyond that. But that's where we want to look at. Now, you cannot be successful without knowing and understanding your break-even point. I think if nothing else is brought out of this evening's webinar, that is probably the most important point I can press. Now, continuing with determining your break-even points. All right, there's three things that you use to determine your break-even point. Your fixed costs, those are things that happen whether the truck rolls or doesn't roll. If it's parked in the lot, it's there. We've got our constant variables. These things are the costs that happen every time you start that truck, whether it's or not you've got other things on it. It's always going to be there. Your tires, your maintenance, your repairs, things like that. And then load-specific costs are things that are either volatile or they are different on every single load, or they don't exist on every load. Things like tolls, fuel, driver by the mile wages, lumper fees, pilot cars, things like that. So the takeaway strategies here are knowing your BEP or your break-even point is the most important step in figuring where you stand relative to the available freight. Now, the one thing I can say is if this is something that you think you need to catch up on, need to review, or it's something that's a new concept to you, I would recommend taking the Introduction to Trucking Business course at TruckersEdge.com. Now, continuing on, what do we need to do? Well, we need to position our company for the start of recovery. All right? In other words, we need to learn to roll with the punches while positioning your company so when the economy's engine starts purring, you're ready to function at full throttle. Be preparing yourself and your company for the impending changes, the transition from the FMCSA SafeStat to CSA 2010 Safety Evaluation, the rewriting of the HOS, the California Air Resources Board rules, and as an example, the New Jersey sleeper rules and other state and local trends. Some of the takeaway strategies that I'm talking about here is, one, take as many webinars, classes, and instructional videos on the details of understanding and complying with CSA 2010 as you possibly can. I cannot stress that. It's going to be a new way of doing things. It's not new laws. It's just that they're going to really be implementing what rules they have in a much more stringent way. But there are ways that you can be able to take advantage of that. Be prepared with a plan on how you're going to operate under reduced hours or loss of the 34-hour restart and other possible changes in the hours of service. Now, kind of have a plan together to figure out what you're going to do. We're going to start hearing more and more about this because they're going to be implementing the proposed rule sometime in July. And so when we start seeing that proposed rule and in comment period, we're going to start getting a better idea what that rule is going to be. And I think it's very important that we concentrate on rather than how much we're going to complain. I mean, yeah, go up online, tell them what you'd like to see, but also in the background be making a plan if what they put up there actually comes to fruition. All right. What California does, the nation seems to follow eventually. So work on integrating SmartWay technology into your operation over the next few years. That will prevent the expenses from hitting you all at one time. Not to mention there's a lot of contracts that are available that if you're a SmartWay authorized and certified operation where you can actually get some pretty good freight contracts out there by being a SmartWay carrier. So it might be something that we could also look in from that perspective. Keep tabs on the changing rules and regulations being brought to bear by those states in which you operate. Keeping track of knowing about what rules are they implementing, in terms of either idling rules or sleeper rules or other rules that they can have control over. Keep in mind that right now in this economy, just like everybody else, everybody's looking for a way to bring in more revenue, and the states are no different than anybody else.